Good morning. My name is Elena Vigna. I am the director of the master degree in Quantitative Finance and Insurance. And now I'm going to introduce you to this master degree. And I will start from the end. From the end means I'm going to look at what are the professions that our students can achieve. So the profession that a student graduated in Quantitative Finance and Insurance are actually risk manager, asset manager, actuarial and financial consultant, trader, researcher or analyst, but also have a position in accounting and audit, planning and control, regulators, and IT. Who are the possible employers of our students? Certainly banks, insurance companies, reinsurance companies, but also consultancy companies, financial institutions, but also non-financial institutions, authorities, regulators, industrial firms. Or you can be the employer of yourself if you are an independent consultant. In order to show you some numbers, I'm going now to show you some placement statistics. They were done on a dataset of 23 graduates in 2017 and 22 graduates in 2018. And the statistics were done 1 year after the graduation. We have a look at what is the sector in which they work, what is the role they have, what is the contract type, and when did they find a position. And we use our internal QFI survey for some of these quantities, sector, role, and when, and we use Alma Laurea results for the contract type. So regarding the sector, we see that both in 2017 and 2018, the main sectors are consultancy companies and banks. And the remaining is insurance companies, authority, non-financial companies, and education. Education means continue to study with either a master program, another master program, or a PhD program. Regarding the role, we see that in 2018, most of our students had a role as risk manager or actuarial consultant or research, analysis, planning, control, and other. In 2017, we see that 1/3 of our students answered other. But other means basically those who choose other were working in a bank, European Central Bank mainly, and they were risk analyst or statistics trainee or financial engineer. And then asset management, treasury, risk management, actuarial consultant, and education as well. What type of contract? Well, a permanent position. 53% of the students graduated in 2017 had a permanent position, and 50% of the students graduating in 2018. Then another 20-25% internship, stage, and then non-standard, the remaining. Regarding the question, when did they find a position? Here there is the graph regarding 2017, so graduates in 2017. On the x-axis, we see the months from the graduation. On the y-axis, we see the percentage of our students. So, for instance, if we take the number 2 here we see that 2 months after the graduation, about 85-86% of our students had a position. If we look at the 4, we see that 4 months after the graduation, 100% of the students had a position. But we also have negative numbers, meaning months before the graduation. So, for instance, -10, and here we see more or less 30%. We see that 10 months before the graduation, about 30% of our students had a position. Regarding 2018, we see similar figures. We see that 100% is reached 8 months after the graduation. So 8 months after the graduation, 100% of the students had a position. And looking on the left, in the negative number side, we see that 10 months before the graduation, almost 40% of the students had a position. Previous placements. This slide reports the companies where our students find a position, and the top international master and PhD programs to which they had access. I'm not going to read all of it, but you see very important names, both for insurance companies, banks, reinsurance companies, consultancies, and top PhD programs, not only in Europe, but all around the world. Graduates' expected competencies. You know that the master program, the name is Quantitative Finance and Insurance, meaning that quantitative tools are very important for the competencies of our graduates. And indeed, all our students will end up having similar quantitative skills and competencies. So what are the competencies we expect them to have? Well, they will be able to use, to master tools, quantitative tools taken from the mathematics, statistics, probability, financial maths, quantitative finance, actuarial science, business and economics. Then we have also IT skills. They will be familiar with the most common software packages used nowadays. And they will also be able to do some programming. To do what? They will use all these quantitative tools and their IT skills and competencies to use the existing models they will find when they work, create new models, change them, test them, monitor them, and change them according to changed conditions. You might know that our student can choose between two different curricula. One is finance and the other is insurance and statistics. Now let's have a look at these two curricula something more into detail. So the insurance side, the main profession that the student who choose the insurance curriculum is the actuary. The definition of actuary taken from internet is very long. I'm not going to read it, but in a nutshell, the actuary is the engineer of the insurance company. Where does the actuary work? Well, insurance companies, for sure, also reinsurance companies, pension funds, health funds, private practice, financial institutions, regulators, but also enterprise risk management, meaning normal firms, non-financial, not related to insurance. What are the expected tasks of the actuary? Well, recalling all the quantitative tools that all our students will have, the actuary in particular will be able to quantify risks. Basically, risks of the insurance company or insurance company, but not only, also of non-financial institutions and firms. They will use advanced models, for instance, stochastics models, to quantify the future probabilities of future events, like, for instance, survival probabilities, death probabilities, probability of a fire, or car accident, and so on. Everything related to the event that trigger payments for insurance companies. They will be able to use the quantitative tools they have to calculate the premiums of every insurance product, to calculate the reserves for the insurance product and monitor them over time. So these are the hard skills that we expect from the actuary. But not only this, the actuaries will also have soft skills, so that they will be able to communicate with the managers and directors who do not have the quantitative background that actuaries have. Last but not least, actuaries will never be unemployed because not only in Italy but all over the world, insurance companies are always looking for actuaries. Not only insurance companies, also banks, financial and non-financial companies. If you take a degree in quantitative finance and insurance, then you can become an actuary. How do you become an actuary? You should pass a national exam in Italy and subscribe to the Ordine Nazionale degli Attuari. In order to take this exam, you need to have a master degree in a certain class. And quantitative finance and insurance has a class which belongs to the classes allowed. So actually, all our students can take the national exam to become Italian actuary. Regarding the finance side, I'm just going to talk about two possible professions, which are risk manager and portfolio manager. So the risk manager, as the word say, is able to calculate the risks of every company, firm, industry he works with. Calculate the risk, assess the severity of the risk using also statistical analysis and statistical software, and he or she should be able to make a recommendation to reduce the risk or eliminate the risk or control the risk. Various types of risk include market risk, credit risk, liquidity risk, operational risk. They will be able to analyze the market position of a bank and then running figures via simulations, via complex, sophisticated stochastic models, and will be able to find value at risk measurements. They will also work with traders to calculate the risk associated to specific transactions, and they will also have the soft skills that actuaries have, so they will be able to communicate with directors and managers who do not have quantitative background. Portfolio manager is about finding the best investment strategy for the investor, and the investor can be either private investor or institutional investor. So designing customized solutions for the investor, for the client. Portfolio manager must have a deep understanding of market condition, and they will have to look at the trends and the future forecast of the future trends in the market, and they will need to maintain a client relationship. So talk to the client, be in contact with the client, explaining him or her the market condition. So again, soft skills are required also to portfolio manager. Chartered Financial Analyst is one of the most important international professional qualifications in quantitative finance. Is worldwide knowledge, and Master degree in Quantitative Finance and Insurance has an ongoing partnership with the CFA Society Italy. So Italian actuaries are about 1,000, slightly above 1,000 now. CFA Society Italy has about 400 members. Becoming a new member of one of these two associations means having a highly qualified job, which can become an achievable goal. But how? What is the cost? The cost is a challenging 2 years program. I would say a very challenging 2 years program, where the students can choose one out of two different curricula, which I'm now going to explain. So here we see the exam of the two curricula. On the left, you see the exam of the finance curriculum. On the right, you see the exam of the insurance and statistics exam. So the exam in light gray are common to the two curricula. The exam in dark gray are different. So in the first year, we see mathematics for finance, numerical and statistical method for finance, asset pricing and portfolio choice, banking. These are the common exam for both curricula. And then finance will have corporate finance and econometrics. Insurance will have mathematics for insurance and life and non-life insurance techniques. Moreover, in the first year, students will have to attend additional IT training, which is compulsory and is programming. In the second year, students will have derivatives and fixed income and commercial law. These are common exams. And then students will have to choose one exam in a set of different exams, among which we find economics of saving and pension, quantitative risk management, decision and uncertainty, statistics too, then the elective, and then the final examination. Regarding the elective, this is a list of some elective which we suggest to students, and in red you see statistical machine learning, which nowadays we suggest to many students because it has become very important nowadays, big data. And then we also have advanced asset pricing, database and algorithms, and then other exams which are in Italian: strategie tecniche di negoziazione di borsa, bilancio delle banche e delle assicurazioni, diritto delle assicurazioni. Let's talk about admission. We have a set of sufficient admission requirements, meaning that if a student satisfies all of these sufficient requirements, then he or she will be automatically admitted. What are these requirements? First, credit requirements. The student must have done at least 18 credits of mathematics, 12 credits of statistics, 18 credits of economics and accounting. The undergraduate degree, so the bachelor grade, must be greater or equal than 105 over 110. And then also the average score in quantitative exam and economics exam must be high. So the average score in mathematics exam must be greater or equal than 27 over 30. The average score in statistical exam must be greater or equal than 27 over 30. The average score in economic exam must be greater or equal than 27 over 30. And then the student must be fluent in English and have at least the level B2 of Common European Standards. As you see, these requirements are very strict. And not all the students satisfy all of them. So what happens if you satisfy just some of them but not all of them? These requirements are sufficient, but they are not necessary. It means that if you satisfy some of them but not all of them, you can still apply. The application is examined by the admission committee and the result can be admitted or not admitted or oral interview. How to apply? Well, students with an Italian bachelor degree must go on the website and they must go on the page How to Apply and read carefully all the instruction in the How to Apply page. After having read all the instruction, they can apply using the application form on this website. The application form, they have to fill in the application form, upload the file required, and then apply. Students instead who have a foreign bachelor degree must follow the centralized application procedure at the Università di Torino. So regarding students with an Italian bachelor degree, as I said, they have to fill in the online application form and they have two possible deadlines, 30th June and 31st of August. A few days after each deadline, the admission committee gives the results and post the admission results in the highlights of the website. So if you apply before 30th June, then in the first days of July, you will have to go on the website, in the highlights of the website, and have a look at the file with the admission results. You will receive no emails with the admission results. What are the files required? 3 are compulsory: official university transcript, curriculum vitae, and identification document. To see an example of the official university transcript, you can go on the website How to Apply page. Here in this page, we have put an example of official university transcript. Okay, you can have a look. If you have an English certificate about the level of your English, you are encouraged to upload it, and then you can upload other titles which are optional if you have them. Reference letter instead should be submitted with a special procedure which is described in the website in the How to Apply page. If you are admitted, then you can enroll from September to December, and the classes start third week of September, more or less. But we offer to students 2 crash courses in the first 2 weeks of September, and the attendance is highly recommended. The 2 crash courses, 20 hours each, are on mathematics and probability, and provide students with the minimum common background, quantitative background that we expect our students to have. So you must definitely attend the 2 crash courses. Then we also offer other additional activities to our students. Here is a list: welcome party in September, where new enrolling students can meet ex-alumni and ask them advice, seminars, tutoring, internship and stage. Then Erasmus, our students go to many different places, visiting professor, and there are 2 scholarships for Finance by Torino Finance. You find more details in the page Events, Activities and Opportunities of our additional activities. And I think this is all. I think I've said everything. So you find all the other information about quantitative finance and insurance in the website, which you should read carefully. And if you have any remaining doubt, you can definitely write to me. I wish you a lovely day.